Hey traders, Marcello here, founder of the Day Trading Academy. Today we're talking about, is short-term trading more profitable than long-term trading? There are a ton of different styles that you guys can trade with depending on the time frame. First, we have a scalper, which is seconds in and out very, very quickly, just above the high frequency trader, if you guys know what that is. After the scalper is the day trader, where you trade intraday. That means that you put in your positions when the market opens, but by the time the market closes, you're out. These positions can last anywhere from 5 minutes to 15 minutes to maybe even an hour, but they always last a day. After that, we have the swing traders and the position traders. These are much more long-term. Swing trading for most of you is probably technically defined as about 3 days. I consider it to be anywhere between about a few days to a few weeks. And then obviously we have position trading, which is something that it could be months or years, right? So day trading is definitely a lot more profitable because we can get in and out a lot quicker. You know, there are going to be times that the market gives us certain movements and certain markets that are very, very profitable. For example, the most common thing that you guys probably know about now is the drops a few years ago in gold and silver, or the drop recently in oil. If some of us were short oil, in a few months, we can stand to make quite a bit of money. The only difference is with day trading, we can do it with much smaller swings. We at the Day Trading Academy teach with a specific kind of chart called tick charts. They're basically transaction based. And what that means is every bar, instead of showing us a certain amount of time, shows us a certain amount of transactions. And what that does is, if we have a lot more volume or a lot more volatility, it increases the amount of bars that we see. And obviously more bars means more transactions. More transactions mean more opportunities to be able to take money. So if you're trading a market, especially like futures, which is much higher leveraged, every dollar that the market goes up, you can make anywhere between $50 to $5,000 instead of, for example, in Forex and stocks, where if it goes up $1, you just make $1. You have to borrow money with interest to be able to bring up your leverage. But it is a lot more profitable to be able to trade day trading or short-term trading rather than long-term trading, because you can get in a lot quicker. There's also, I consider, to be a lot less risk with short-term trading, because at the end of the day, you can be in cash. All your positions are zero. It doesn't matter what happens in China or in Iran or Europe. All your positions are closed. So you can stand to make, you know, I don't want to give you guys an exact amount, because obviously there's a lot of different ways to day trade. You can make thousands a day. You can make tens of thousands a day. There's a recent video that we did, if you guys want to watch it, where I show you guys the live P&L from a $16,007 trade in less than 24 hours. That's definitely possible. With long-term trading or position trading, you can stand to make that, but obviously it's going to take more time. So that's a little bit about the making more money or less money with short-term trading than long-term trading. Let us know if you guys have any questions. I'll leave you guys with a review, and have a great one. Ciao.